Radio.
You're listening to Cryptocurrent, the only podcast that explores the bold projects, exciting opportunities, and the growing reach of blockchain and cryptocurrency. Whether you've got skin in the game or you're just crypto curious, keep an open mind, enjoy the conversation, and stay cryptocurrent. Now here's your host, Richard Carthon.
Hello, everyone. Welcome to another episode of Cryptocurrent. Your host here, Richard Carthon, and today I got a special guest all the way up in New York City. We got Sinjin. How are you doing today?
Yeah, pretty good. Thanks, Richard.
Man, I'm really excited to learn about your particular project, IBMR.io, Solving Global Inequity. So first, before we dive into your company, can you please let me know a little bit about yourself? Give us some background.
All right. I had a fintech company out in the Philippines, had 1,500 employees, 100,000 agents, and sold that to Alibaba CP Group back in 2017. And I used to be in the gaming world in Macau. I was a regional director for a company called PokerStars. I legalized Texas Hold'em poker in Macau in 2008.
Wow.
And I spread that around the entire Asia, basically, and I've actually advised the Chinese government on gaming as well. And before that, PricewaterhouseCoopers, international consultant, international negotiator, pretty boring stuff, but I was in the regulatory space, so that's what led me to gaming, and then gaming led me to fintech, and then here I am.
Gotcha. Yeah. I mean, you had quite the boring background. I can tell you just, not living a very fun life. Oh my gosh, man, that's amazing. So let's just unpack a little bit of that, right? So back in 2017, you saw your company. At which point were you like, where did you first hear about cryptocurrency and blockchain? What was your first introduction into the space?
Well, I was part of payments before it was called fintech, right? And obviously in online gaming specifically. I was in gaming in Macau, but also online as well. And payment processing has always been a thing. And so I would say those people, in terms of like commercial application in gaming, we were very aware of Bitcoin right back in like 2010, 2011. And for us, we didn't have this kind of understanding of what Bitcoin really was in terms of, we knew it was peer-to-peer, but the entire decentralized thing was kind of over our heads. All we thought about is like, if people think it has value, it's got value. That's it. It's kind of binary for us. Because if it doesn't have any value, then it's zero. It just doesn't work. Right. So on a very practical point of view, we looked at it, but the volatility was massive. And we just basically looked at Bitcoin basically as a form of a payment solution. And I think the last project I had with Bitcoin was probably around 2012. And at that time, Bitcoin was shooting up to like $1,000. Yeah. And then you had the Mt. Gox thing, and then basically it just died. Right. And I didn't even look at it until like 2017. So this is, I guess, a year after Ethereum had really kind of taken off in terms of their crowdfunding. Yeah. And then a friend of mine who used to be a pro poker player got into crypto trading, and he calls me up in May 2017. I'm driving to Boston, and he calls me up and he says, "Sinjin, I need some advice." I'm like, "What do you need advice on?" He says, "There's this mid-sized Hong Kong investment bank. They want to open a crypto trading desk, and they want me to head it. How much should I ask for the terms?" And I'm like, whoa, wait, what are you talking about? Like, what? A crypto trading desk? Are you kidding me, right? And it's it's a mid-sized Hong Kong investment company, so it's big. It's not a small boutique thing. It's fairly big. It's not big like Credit Suisse or HSBC, but it's still but it's still doing billions of dollars in trades and assets and stuff. So I said, whoa, back up. Why would they be doing a crypto desk? Because at this point, I hadn't really followed anything except for Bitcoin up to the point that it had crashed and the Mt. Gox thing, and I just kind of left it there. And a lot of the projects that I had been seeing were just mining projects. That's it. So he goes to tell me about Ethereum, how it's just blown up. He bought it at like 17 cents, and then he had he had actually started that year, 2017, with 80K. And it was at 1.1 million. So that was like only 5 months, right? And so everyone in Hong Kong, obviously, Hong Kong's all about the money, and they're just going nuts over this stuff. And then I did a kind of deep dive in it. And what was good about it was that my poker friend, who was really deeply into it on the trading side, he basically got me introductions with a lot of really OG crypto guys. And they, at that time, they were not really crypto guys. They're all Bitcoin maximalist guys, right?
Right.
And the very first thing the guy asked me was like, have you read the Satoshi white paper? And like, I haven't. Obviously, I had like back like 2011, but didn't know what it really kind of meant. I was just like, okay, it's there, whatever, whatnot. And he just basically proceeded to just say that everything's a shit coin. And this is like 2017, right? And that I should read the Satoshi white paper. And the guy reads it like once a month religiously. So I'm like, okay, fine. And I go back and I read the Satoshi white paper now, kind of eyes a little bit more open, and I read it like 10 times. And I'm starting to like really kind of get down the rabbit hole. And I end up meeting some other guys in Toronto. And they're talking to me about like decentralization. And these guys are smart guys. And I don't understand, like, actually, I don't understand what the fuck they're really talking about, to be honest, right? Because they're like,
it's like, you're trying to entertain the conversation, but to have someone like really break down, like, what does this actually mean? Yeah.
And so I'm like, okay, is this decentralization? They're like, no, that's not really decentralization. I'm like, is this decentralization? They're like, no, that's not really decentralization. I'm like, okay. And I'm like, these guys are smart guys, so I'm going to continue to like have this conversation with them because I don't really get what they're getting at. And then it took about 2 weeks. I remember sitting at home, really thinking about it, and then I got it. Like, I got it without like kind of jumping off a kind of centralization kind of like a platform, but like really just being decentralized. And then I understood, the double spend, why it was really significant. And then after I understood why it was really significant in terms of digitizing something and kind of having this infrastructure to create something that's truly decentralized from the start, then, then it was just like, wow. And then I spent another 2 weeks thinking to myself, like, what could you really apply this to? And then having come from gaming and fintech, obviously the easiest thing was like everyone's like calling me up and they're like, Sinjin, let's do a gaming project, let's ICO this, get 40 million. And people were really congratulating me. They're like, Sinjin, did you raise 20 million yet? I'm like, no, I haven't done that. I'm like, why? I go, I don't think you guys understand that this is such an incredible innovation that I don't want to spend my time on a short-term gain here. Now, a lot of the other kids, these guys, it's their first rodeo. They're happy. They have $1 million in crypto. They think they're really rich. They buy like a Lambo and they're happy. Okay. I mean, I've already sold my company to Alibaba. I've already lived in Macau in the suite for 3 years. I mean, I could buy a Lambo in cash like tomorrow, and I could buy 4 or 5 of them, and it wouldn't make a difference, right? I mean, these kids are like thinking they're rich, and I'm like, you guys have no idea, because if these people are this dumb and they're making this much money, that means there's so much more depth to either that it's a massive speculation market or the innovation is really that crazy and people are just getting excited. And I'm 44. And so I was an undergraduate when, you had the entire internet boom. And I still remember that time, I was in 93, 94, I went into university and, I remember just seeing like Mosaic at the very end of it all and then getting introduced to Netscape, having like a Pine email account. We were still chatting on the Unix terminals for IRC. And I remember like exactly how it was. And it was exactly the same kind of feeling I got. So instead of like, I should have gone to like, a health camp or whatever, because my liver's all shot. I have cardiovascular disease from smoking and all this other stuff. And, it was kind of like this retirement time. I was like, you know what? This is so compelling. I'm going to jump into it. And then I thought to myself, what is the biggest thing that a decentralized thing could do? And then I realized, these guys are making these tokens. These guys are trying to do like, decentralized finance. Even at that time, that was something that people were really talking about, or digital ID or whatever. But I thought to myself, man, like if you could make a reserve currency and like create stability, that would be amazing. And it hasn't been since like the late 1800s that, banks in the United States or, like companies in general could issue their own currency, right? If you look at Hong Kong, you have Standard Chartered, HSBC, Bank of China. They issue the currency on behalf of Hong Kong. So if you look at the Hong Kong bills, it has different bank names on it. But, that's all regulated under the government. But like this kind of idea of what a cryptocurrency really could be. And I'm from gaming and fintech, and this is East Asia and emerging markets. So like, people say that they're hardcore business guys, and I'm like, listen, children. Like if you're in fintech and in gaming from Asia, and I was there at the really like the birth of Macau in like 2007 to 2010. You boys don't know what hardcore really is, and part of that hardcoreness is like you see this great amount of wealth where you think, making, $250 million in profit a year is really nothing because that's how much money people are making. And then you see where like these casinos and where, people are kind of looking for growth. And then you look at places like the Philippines, Indonesia, Thailand, and you see all this amount of like high tech growth happening, but you see all this poverty, right? And this bothered me. This like, this is like fundamentally just bothered me for like the last 10, 15 years, especially the last 6 years was in the Philippines working for this family office and doing this co-investment in this fintech firm. And, I just didn't see any structural resolution to it. Yeah. And so that 2 weeks that I spent thinking about it after I had really understood what decentralization was, well, up to that point, then I thought, like, man, if you really did this, you'd have a distributed asset that you could give to anybody, and it wouldn't matter whether or not like it was a dictatorship government or a really emerging market, but where everything was controlled by the economic elites. As long as they had an internet connection, a mobile phone, they could get it. And that's where it really started at that point. And I have a pretty eclectic background in terms of my education. I mean, I did my undergraduate in political theory, but I did my master's in theology, master's of divinity at the University of Toronto. So obviously, I'm not the kind of guy to get ordained, but I was on the track for being a professor. And and then I ended up doing my MBA. So my friends in politics from undergraduate, they're like, why would you go to theology? And then my friends in theology are like, why would you do business, right? But, I was kind of just looking for, how do I say, just an understanding of things, right? I mean, I wasn't really studying to get a job, and I was fortunate because my family was well off enough that I could spend money on my education. Yeah. But, that kind of social justice has always been at the kind of forefront of my mind. And so, long story short, yeah.
Yeah, I mean, and that's how it kind of blended together into what has become your new company. So, like, thank you for giving us that background, because it wraps everything together between, like, you've seen the extremes of what a lot of money looks like and what a great emerging tech and how that can change lives, but then also the background of social justice and everything you've been able to see in the Philippines and everywhere else. And so now tell us a bit more about your company and what you're doing and how you've been able to build it up.
Okay, well, so IBMR is the International Blockchain Monetary Reserve, and it's such a pompous name, obviously. I mean, like, it's like it's basically a tech startup in fintech, and we're calling it like the equivalent of the IMF, like the International Monetary Fund, right? But so the tagline is that, IBMR is the IMF of crypto, meaning that IMF, they're trying to create global stability by backing countries and their markets and their currencies and their infrastructure. Whereas we're not going through any agency at all. We're trying to go directly to the individual and give them something that they can use to either create stability or a hedge in their daily lives. And so a lot of people may not know in America, but in Southeast Asia, the US dollar is basically used by everyone. Even, you look at Cambodia, any transaction that's over $1, it's in US dollars. Okay, wow. So local currency, yeah. And, you'll go to a residential area in the Philippines or Indonesia or Thailand, you'll see a money changer there. Why? Because people hedge against their local currency holding US dollars, right? And the reason for that is because, there's a lot of instability with their currency. The other problem, though, too, is that, these countries are really lauded because, like, they have a lot of overseas workers. And then, everyone talks about this thing like remittance, okay? Like, Ripple always talks about it. Libra's talking about it. Western Union talks about it. And this entire thing is all about, how do I say, we're going to lower the cost for remittance for all these like emerging markets. So we're doing such a great thing like financial inclusion. And it's all bullshit. This is all a money grab, because any country that has remittance, it means that you've sent your mother or father away to work in a foreign country because you can't afford to work in your own country to pay everything, right? And they're away for like 5 to 10 years, right? And they're sending money back, right? Yeah. So, and people are saying remittance is a good thing. No, remittance means that your country sucks, right? That there's some level of corruption or financial deep disparity or structural issues that can't allow someone who is, a doctor, a nurse, a professor, a teacher to stay in their own country and work in that profession. Rather, they're a nurse and then they're going overseas and they're a masseuse because they make 3 times the money, right? And you're going to tell me that your idea of structurally, addressing this is by lowering the remittance cost. And then, basically for us, we decided that we wanted to, create a reserve currency, and that kind of morphed the idea. It took about 2 years to write the white paper. I actually attended Harvard Kennedy School for Economic Development during this time, just so I could make sure that I was up to date on things. So I got my executive public policy certificate from Harvard Kennedy during this time to, really research this. And what I came down to was there's this book called Poor Economics, and the authors just won the Nobel Economic Prize this year, but it was written in 2011. And so we based our economic theory behind it. And what they realized was that in microfinance, microloans and all this other stuff, you have interest rates of like 30 to 40 to even 60% a year. And basically what that happens is that when you're paying 30 to 60%, it's great you can get a loan, you can pay for things and things are more stable, but you can never scale your business. And what they found out is that if you just give someone like a dog and a cow and 2 chickens, that makes their lives immeasurably better. So like a debt-free asset. And so what we did was basically for ARCC, is the Asia Reserve Currency coin. We basically took about like $2.7 million in assets, and we're backing this, and we're trying to create a micro asset, so a debt-free asset, which we can freely distribute to everybody. And then we're kind of backing this with that 2.7 million, and we're going to list that 90% to 95% of anything that comes in for the sale of this coin is going to this reserve. And the reserve is like an endowment fund, right? So it basically just adds up, and then the interest or whatever like that is used to back the value. And that's what we're starting with right now. I don't know how big it will get, but at least as a proof of concept, we would try to want to get it out there.
For sure. No, I mean, and thanks for breaking that down again too. First of all, those interest rates are insane, and completely understand why you wouldn't be able to scale up a business from there, because you're crippling somebody before they can really even start to make further business moves to continue to like go on the scale that they are trying to make. And the fact that you're going to be able to do these transactions and set it up like an endowment to where all the money that's kind of sitting in the background that's making money on top of itself, but then still being able to give out money to companies who are, one, who need it, and then two, are going to be able to use that funding that is going to be a little bit more stable than some of their own countries' currencies. I mean, there's a lot of implications with that. So can you kind of speak a little bit more to who is your target audience and what would they do to be able to apply to your fund to be able to get some of these resources?
Okay, so we're not targeting companies at all. We're targeting individuals completely. And we're targeting the urban working poor in Southeast Asia to start with. So Southeast Asia's population is like 650 million people, and about, I would say about 200 million live in the urban centers, and about half of them live in poverty, meaning that they live there, but their standard of living hasn't changed for the last 10 years. But surprisingly, Southeast Asia's economy has grown 66% in the last 10 years, right? So, I mean, they've been doing very, very well, but it's all been going to the elite class. So part of that, what ends up happening is that the infrastructure in these cities like Manila, Jakarta, Bangkok, it's just basically going to the shopping mall, going to the shopping centers, going to like the private resorts, and that's it. So for the most part, the people who are living in these urban centers, their infrastructure sucks because the public infrastructure is not being built for them. So what we came up with was, everything in cryptocurrencies. If you look at Bitcoin, what we really realized was that Bitcoin was an incentive to maintain this decentralized information, this decentralized network for security, right? So what we wanted to do was we wanted to create a decentralized information network that people could basically report on, where's illegal garbage dumping, where is a brownout or flooding, right? What are their cell phone costs? What are their internet costs? Is this road under construction? Has it been under construction for like the last year? And so for us to get a real picture of data, what is happening to those people who are composing half the population of these cities, but they're getting zero recognition because nobody cares about them. They don't have any money, they don't have any data, they don't have any political representation. So by reporting this, not only do we get a layer of data where no layer existed, they are also earning ARCC as they do that. Right, so that's the incentive. So we get quality data as long as the ARCC is, really being backed. And with this kind of data set, we can begin to kind of create like public mandates and say, look, Manila, these roads in this area, they've been under construction for 10 years. I mean, is this normal? You know, and bring that to a front. And then also, because these individuals are gaining our assets, our ARCC, they can basically put their money where their mouth is, right? I mean, they can use that to either vote with it or support a candidate, or even put it towards community projects. And when you are able to actually address infrastructure level issues in the community, whether it's clean water or garbage dumping or whatever like that, then utilizing the currency itself for investment also becomes a lot better. People are not sick. People can actually get to places where there's not traffic. There's not electrical brownouts. So we're really taking a very macro view. And because of this, we've been a complete loon shot, absolutely all the way. I mean, I talked to a VC because they're like, hey, Sinjin, like, tell me about your project. I'm like, listen, Bob, I don't want to talk to you about my project. Like, why? I'm like, listen, you're going to expect some elevator pitch here. You're going to expect me to say something. But number one is, my co-founder is a billionaire. You know, the advisors, some of them are billionaires. I'm fairly well off myself. I don't need your money, and I know this is not going to end well. And they'll be like, no, Sinjin, just let us know what the project is. And I get into this very like macroeconomic, really creating an economic system for the urban working poor. Right. And they're like, yo, like, Sinjin, you're never going to raise money with this. You know, like, you better break it up into 10 different projects. And I think this is where the disconnect is in the industry, is that because I've been there. I'm not a young guy. I'm like older than some of these VCs.
Well, I'm going to explain this a little bit more, but I really want to stop you real quick and make this really important point. And it's that when you're going after social good and you're going after some of these social justice projects, when you're talking with people who have the money, and like as you're going out there, the concept is like, yes, you can go help these people, but if you're not making money in the process, then what is the point? So I am very curious on like, what is the play here? Is it truly just paying it forward, paying it like I want to be able to help these people, or is it like where's the mutual beneficial piece come in, if you will?
Okay, yeah. So the entire company is structured like a hedge fund. So like, all like the token distribution is basically myself and the co-founder, Stanley Kwok. We put in everything 50-50, right?
Right.
Including a lot of the funds that have come in. And so we're going to get, a convertible note on it. So we're going to get our tokens out of it. But basically, to tell you the truth, like I'm a money rainmaker, right? Like nobody makes money like I make money. And I'm in gaming and fintech. So it's all about transactions. On the retail side. So imagine this. If we were to actually, first and foremost, raise this fund and back this cryptocurrency ARCC, and people were actually able to earn it, right? And then invest in it, and then basically do transactions on our platform. Because basically the next step is, once they earn it, we don't want them just to spend it. We want them to invest it. We want them to grow it. Right. Mm-hmm. So one of our projects, we haven't officially announced it, but it kind of got outed on the blockchain, was called MESE, MESE.io. So micro equity stock exchange. Okay. So what we've done is we've taken Amazon stocks and Microsoft and like the FANG stocks, and we've basically divided them into 10,000 increments. Right. So 10,000 of it. Right. And we're basically going to allow people in emerging markets to buy these tech stocks, right? Because they can. And why we picked it 10,000? So if what do you call it, Tesla's at $600, then it's 6 cents, right, per share, right? Mm-hmm. But when these guys are able to buy into this, right, at 6 cents buying into it, imagine Tesla goes up next year again, like they go up like 20%. Where do you get 20% on 6 cents? Nowhere. Nothing. Right? Yeah. Because when cash is like low, like less than like, I would say like $1,000, right? You get nothing on it. You get 0.02%, if that, right?
Basically what people are making in the savings account in the US right now.
Exactly. Exactly. And it's such a robbery, actually, because why should they be excluded by all of this, right? And this is where, if we are able to create this asset management system for them, right, and able to take $1 or 70 cents and do 10% or 20% return on them for them, right? then we will take, obviously a transaction fee on this, right? Whether it's 2% or 3% or whatever, because it's all on the blockchain. I mean, we don't have like this overhead cost that other microfinance companies have. Now, imagine if we have 10 million people on our asset management platform, right? Because they have received, ARCC free, but it's not really free, right? Because we're still doing the data model, right? The fact of the matter is, like Google, Facebook, like all these other companies, I mean, they're making so much money off the data, but they're making it in such micro increments because why? They're aggregating the data. That's the real key, right? But for Southeast Asian people in the urban working poor, they may have cell phones, right? But if they have a problem, they're not Googling the problem, right? So in first world countries, you have a problem, you Google the problem. First world country, you want to buy something on Amazon, you search what you want to buy on Amazon, right? So they have all this first world data, and they have all this wealthy data, but nobody has the data of the urban working poor. And that's not a small amount of people. That's like 200 million people in Southeast Asia, right? If we can get 10% of that, 20 million people on our platform, that data has worth, whether it's the UN wanting to know about things that are happening in the urban centers or the World Health Organization or whatever, whatnot. Because if you look at a lot of these NGOs, a lot of the times when they're in these emerging markets, they're in the countryside. Why? Because they can control the experiment in the countryside. They can control the pilot there. Because when you're in the urban center, it's messy. Yeah. Like, let's be honest. You got like corrupt politicians. You got like infrastructure issues. You got transient people. You got theft, and you got guys who are like, they're not farmers, they're hustlers, right. And they're hustlers because they got no choice but to be a hustler in the city, right? This doesn't make for a good UN pilot, okay? Like, we're converting like these local gambling bookies to a new sustainable form of urban entertainment. Like, these kind of things never happen. But if we're able to do this and create this data set, finally, for the first time, a lot of these major NGOs will also have access to these data sets. And I'm sure, we're definitely open for Nike and for Adidas and all these other major companies to come in and say, look, if we want to, address this market, what can we do? And then kind of look at, this kind of getting the kind of data set on this urban market, right? Because it's nuts, but Asians, even Southeast Asians, no matter how much money they don't have, they still like to bling. Okay, they still like to spend money, and so it is a consumer market as well. So long story short is like, we're really trying to not just aggregate this data and make a play on them, but really equip them with a financial model that actually works for them at their level. Because every time you're talking about like, we're going to do financial inclusion and we're Facebook and we're going to do Libra, but you got to buy Libra. Well, how's that financially inclusive?
Because you're still making them have to come to the table with something.
That's right. It needed a totally different system. And if you're going to give them a totally different system, you got to give them a different way to make the money, right? Yeah. So let's aggregate that data, the data that they do have, and let's pay them for them actually, and get them on a system which helps them grow their money. And then we're helping them grow their money. We'll take the transaction fee off that. And I'm good with that.
Yeah. No, thank you for putting a nice bow on that, explaining all that through. But Sinjin, thanks for all the information. What is like a final thought that you want to leave to wrap all this up for us?
Just that, this is a moonshot, and I hope that people like, even though it is one that, we're looking at a very broad vision, but, we're also looking at, I think we're really looking at what the promise of blockchain really is. And I think that is a new financial system, and that's what we're going for. So for all you people who want to hate on me because you don't understand what's going on, look, we got the money, we have the cash, so go keep hating. I don't care. We're still going to do it. So I'll see you guys on the other side.
All right. And for all those who want to learn a little bit more about everything that you have going on, what are some different ways they connect with you or learn more about your company?
Yeah, they can go to ibmr.io. That's the main website. And we have a co-development partnership with Algorand out of Boston. Great technical partners. We're doing a lot of co-development with them. And we do a lot of events with them as well. So just check out Algorand as well, because we're pretty much hand in hand at this point.
Gotcha. Well, perfect. Well, again, really appreciate your time today. Thank you so much for coming and explaining everything. And for everyone listening, stay cryptocurrent. Hi, everyone. Thanks for listening to another episode of Cryptocurrent. For more information on this episode and all of our episodes, please visit us at www.crypto-current.co. Stay up to date with the latest news in cryptocurrency.
You'll receive daily emails Monday through Friday that are personalized and curated content specific to you and your interest, powered by artificial intelligence. Are you an accredited investor looking to invest in cryptocurrency? Crescent City Capital can help. Go to crescentcitycapital.com for more information. If you're finding value in our content, please take 5 minutes to leave a 5-star review and a great comment. Also, please make sure to share this podcast with others. Hello, everyone. I hope you're enjoying the quality of this podcast. I can only thank my amazing producer, Andrew DeRitter, with DeRitter Productions, who has put this together. If you have any podcast, visual, or video needs, please go to DeRitterProductions.com. That's DERITTER Productions.com.
Thanks for tuning in to another episode of Cryptocurrent with Richard Carthon. We'll be back with more exciting developments from the world of blockchain and cryptocurrency next week. But until then, stay cryptocurrent.
Please use available exits now.